highlight on the weekly basis, on a monthly basis, the technical reading for the major index. So let's take a look at the quick for the index reading. Now, the first will be the FTSE Asian 40 Index, which is we use as our benchmark for Asian equity in general. As per our report last week, we did highlight that the index could actually getting higher. Consolidation could be limited. The consolidation was indeed limited, but the index continued to gain higher. Currently trading above the 50-day moving average, but still fell short to hit our immediate resistance at 10,550. So this is also, you can see, as 61.8 Fibonacci level at B. So we highlight this as a quite critical resistance in order for the overall medium term, or we call that medium term bearish to turn bullish. So this level need to be taken out. But regardless, if you've seen on the momentum reading, is still pretty much elevated, and the long-term uptrend still pretty much intact. So that means right now, short-term up, medium-term still, I would say neutral, but long-term is still pretty much up. So right now, what we need is actually a breakout above 10,550 to turn the midterm bias into outside as well. As for now, we believe there's more room for further outside move, and we expect the ongoing uptrend to continue in tandem with generally positive reading in the US market. Now, for Malaysia, it is quite interesting as the KSCI index is actually forming an inverted head and shoulder pattern, but it's still in progress. It's not yet to break out above the neckline. So that means this pattern still not been validated yet. Which means a breakout above 1475 is pretty much, I would say, critical resistance in order to validate this so-called bullish reversal move. So if you notice, the reading or RSI is consistently trading higher, despite that means this is a bullish divergence versus a lower structure over here. As for now, we think there's a decent chance for the index to trade higher, but this level need to take it out 1470. So it could take quite a while because we're using the weekly chart out here. It doesn't have to be this week. It could be take a few weeks or a few months. But we think there's a decent chance for this current level, particularly at recent last support between 1380-1370 is pretty much a major support, and pretty much was being respected despite the recent low. And then we think in general the KSCI still has more room for their recovery, at least in the short and medium term. Alright, for small cap, however, the ongoing correction has ended after the index built a new baseline within 61.8 Fibonacci, and of course the 200-day moving average. There's a minor breakout on the RSI movement here, indicating that momentum has started to spike further. MACD turned positive, but the price action is still pretty much weak. So that means a breakout above 50-day moving average could actually signal a continuation of the new or the ongoing uptrend movement. So we put our next target at 15,750 and 16,430. For Indonesia, JCI index is expected to challenge the major resistance between 6,900 region, which is also the neckline for double bottom pattern over here. A failure to break this level could actually kickstart a new down cycle. As for now, we think the risk or the chances for the stock, so the index to trade higher is pretty much there. So first order of business is actually the index need to take out the immediate resistance at the level that we highlighted here. And then for IDX sector industrial index for what we call that Indonesia market, we see a double bottom pattern. Again, a similar neckline was being seen versus JCI index. However, the index here have a decent chance to trade much higher, particularly when you see the index has been trading above the Ichimoku cloud for the first time since October last year. So because of that, I think there's a decent chance for the momentum to continue to go up further and be challenging the immediate resistance at 1,220 point. For PCA index, Philippine benchmark index, the correction still pretty much ongoing. As you can see here, the last week, recently was a move within 50% was pretty much kept within this so-called 88-day moving average. We are seeing a hidden bullish divergence. Hidden bullish divergence means momentum create a new higher high structure, but the price create a lower high structure. Is the other way around versus the normal divergence. So the sell off for last Friday set to kickstart a new down cycle as we expect the correction to complete it at least at the lower support level as we highlight over here. You can see here there's also rejection pretty huge on the D trend indicator, suggesting the down cycle stay pretty much intact. So immediate support seen at 6,250 and 6,000 point. Meanwhile, for Philippine Industrial Index, downtrend is still intact, correction still ongoing. The index has come below the 200-day moving average, and you can see a return move here. There's a rejection within the 100 moving average again, and the downside is expected to continue lower with the support seen as 9,300 and 9,100. For Singapore, the recent decline that we expected was kept right within the 200-day moving average. And there's a pretty much a recovery for the past 3 weeks. So the hammer pattern right within the critical support and also 200 weeks moving average is actually seeing a continuation of the ongoing recovery. So because of that, the long-term uptrend for the SCI index is still pretty much intact. So this is in tandem with all the positive reading we've seen on the FTSE 14 and regional index movement. So momentum is improving, so we expect the SCI index to trade higher with the next target at 3,330 and 3,450. Meanwhile, for small cap index in Singapore, it does look potential for the technical rebound, particularly when this index forming a harami pattern. Momentum also improving despite a little bit weaker. The downtrend is pretty much intact, so that means any rebound here we think could be kept, particularly within resistance we highlight over here, 259 and 270. For Thailand, the uptrend or the ongoing what we call that recovery is still pretty much intact. The index closed back above the 1,600 point, and you can see despite the so-called consolidation, there's a runway gap over here, and the uptrend still pretty much intact. So we think the ongoing short-term recovery to continue at least in the term with the next target at 1620 and 1640. Meanwhile, for my index, which is a small cap for the Thai, downtrend is still pretty much intact. The recent higher low structure, this is lower high structure was ongoing. You can see multiple rejection has been formed within this current region. 145 point. So given the recent what we call that weakness, we expect the downtrend to continue with the target back as 120 and 500 point. Last but not least would be Vietnam. VN index uptrend is still pretty much intact despite a slower pace. You can see the uptrend channel pretty much intact. The index continues to trade above the 50-day moving average, and we expect the positively improve trading volume, and MACD could actually extend the ongoing recovery toward the next resistance target at 1094 and 1124 point. Last but not least, HNN index is expected to showcase a similar pattern with VN index, but on the much slower pace. You can see here in terms of the relative strength performance, it does look slightly weaker. Consolidation is much more flattish for the HNN index, but regardless, we still think it will follow the benchmark index, but at much more lower pace. And the resistance is actually at 215 and 224. All right, that will be all for me. Thank you.